All right, let's talk about the engine room of the Canadian economy. I'm talking about financing. It's the current that powers pretty much everything, from our biggest dreams to our day-to-day operations, and today we're going to break down exactly how it all works.
So think about it for a second. Buying that dream home you've had your eye on, or maybe getting a new truck for your company, or even expanding your entire business. What's the one thing that ties all of those ambitions together?
Yup, you got it. It doesn't matter if it's personal or professional. Growth is fueled by capital. And understanding how to get it and how to manage it, well, that's the real key to turning a plan into a reality.
Okay, so let's start with the most personal piece of this whole puzzle, your financial reputation. The best way to think about it is like a report card that, well, it kind of follows you everywhere.
And that report card is your credit score. It's this 3-digit number that tells a surprisingly detailed story about your financial habits. Here in Canada, the two main players, Equifax and TransUnion, they track how we all manage our borrowing and boil it all down into this simple score for lenders.
Now, you might think the formula for your score is some big secret, but it's really not. It all breaks down into 5 key pieces: your payment history, how much debt you're carrying, how long you've had credit, the different types of credit you use, and any recent checks on your file. And out of all of those, there's one that matters way more than the rest.
And here it is. A full 35% of your score comes down to one simple thing: paying your bills on time. It just goes to show you that consistency is king. Every single payment, from your phone bill to your car loan, it all has an impact.
And this really shows just how long your financial story can be. I mean, a missed payment that ends up in collections, that can stay on your record for 6 years. A bankruptcy can stick with you for 7 or even 14 years. So what you do today, it really does echo long into the future.
Now, let's switch gears and see how that personal report card becomes the foundation for your business's future. The principles are pretty similar, but, the stakes get a whole lot bigger. In fact, for a lot of small businesses, your personal credit score is one of the very first things a lender is going to look at.
So here's a classic crossroads for any business owner. You need a critical piece of equipment to run your company. But how do you get it without totally draining your cash flow? I mean, this one decision can really shape your company's financial health for years.
And this is the fundamental choice, right? With a loan, you're buying an asset for the long haul. You're building equity. A lease, on the other hand, it's more like a long-term rental. It has lower upfront costs, and it gives you the ability to upgrade easily, which is perfect for things like technology. It's a strategic decision. Do you want to prioritize ownership or flexibility?
And right now, that choice isn't just about the equipment. It's really about navigating a pretty uncertain economic landscape. As Andrew Del Baccia from Stride Capital points out, businesses are being really careful with their cash flow, making sure they can handle their payments if things suddenly shift. One of the biggest hurdles business owners face is just not being prepared. Seriously, having your financials in perfect order is absolutely non-negotiable. Trying to cut corners on bookkeeping, that just makes the financing process longer, more stressful, and in the end, way more expensive. Investing in a professional, it almost always pays for itself. Okay, so you've got your business financing figured out. Maybe it's a loan, maybe it's a lease. But what happens when the very rules that govern those loans go through a massive, once-in-a-generation upgrade? Well, that is exactly what just happened here in Canada.
This is the absolute perfect way to think about the transition away from what was called CDOR. It was a benchmark rate, like a core ingredient in literally thousands of financial recipes. And now, that ingredient has been replaced, which changes the formula for everyone. So what was this ingredient? Well, for decades, CDOR was the standard for business lending. But here's the key thing to understand. It was based on estimates from just a small group of banks. As global markets modernized, Canada moved to a much more robust and reliable system called CORA. And CORA is based on actual overnight transactions, which makes it a way more accurate and transparent reflection of the market.
Now, this whole change didn't just happen overnight. Not at all. It was a carefully managed, multi-stage process with very clear deadlines. This gave the entire market plenty of time to adapt and get ready for the new, more transparent system.
This massive transition was guided by a group of experts known as CARE, and their whole job was to make sure this system upgrade happened smoothly, bringing Canadian lending in line with global best practices and, ultimately, boosting confidence in our whole financial system.
So, a modernized financial system isn't just about having new rules. It also opens the door to some incredible new opportunities for growth, especially for those innovative businesses that are ready to scale up.
Just take a look at that number. Programs like the Western Business Scale-Up and Productivity Program are offering up to $5 million in interest-free, repayable funding for high-growth companies to go after really ambitious projects. I mean, that is game-changing capital.
And this funding gives us a really strategic look at where the economy is heading. It's targeted at things like adopting AI and advanced tech, developing clean energy solutions, and expanding into new markets. It's all about fueling that next wave of innovation and productivity.
So as we wrap things up, I want to come back to this quote. Because whether it's your personal credit score that unlocks your first mortgage or a multi-million-dollar loan for your business, it all comes back to the record of your habits and your reputation. It really is a core part of your financial identity.
The rules, the tools, the opportunities, they're all laid out for you. The only question left is how are you going to use them to draw your own map to success?